look at from an investment standpoint, I truly believe that the best investment for everybody is their own buy and hold real estate. And a second is being the bank and investing in syndications because you get the benefits of it. But with being the bank, your capital tends to be a little bit more accessible. It's out for 6 to 12 months max. And if you start doing it with an IRA, you be really creative with it. And you're protected. Your first position, your loss pay on insurance.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Scott Hollister, you are based in Connecticut. Isn't that right?
Yes, sir.
Man, hey, welcome to the show. Welcome to the show. It's a pleasure to have you on. There's 3 questions I ask every person who comes on the show. Can you very quickly tell us, where did you start? Where are you now? And how did you get there?
Yeah, so I started as a Connecticut teacher for 4 years, graduated college 2012. Started my first investment property, which is a house hack, bought 2 houses on one lot, lived in it, rented out the other. So that was my first, taste of real estate. And then left teaching about 16, 17, got my license. And then from there, full-time, real estate agent, investor. And today we do mostly residential commercial sales, bunch of, rehab properties and a little bit of financing. And it's a good, creative approach to bootstrapping. If you don't have a lot of capital, you got to be creative. So,
man, that's, you make it sound easy there. Teacher turned real estate investor. Oh, wait, now we're going to quit our full-time job. Then we're going to, become, real estate and commercial sales brokerage and still do our own projects, do creative financing. I mean, there's a lot to unpack there. And even inside of that, there's a lot of, very, very niche focuses that you could get in your lane and stay there. But it sounds like you've been able to kind of branch out and do a lot of things at once. So can you kind of give us the play-by-play of how you started stacking on the different iterations of your real estate investing business and why, perhaps?
Yeah, that is a great question. Why I probably won't give you. And I go back to obviously Brandon Turner. He's always teaching, hey, build one bridge, stick with that bridge until you get to that island, because even a bridge that's 99% done still doesn't serve its purpose. So I do a lot of hats, and that's always been a trouble of. My dad was a blue collar worker, told me to, push into college. I saw them lose their house during the crash. Mm-hmm. So that pushed me with my first paycheck to get that house hack, say, hey, this is what I want to do. I want to secure my income foundation with something that's going to be really strong just in case I were to lose my job. And then I met, a bunch of people at Bigger Pockets, and that's how I started networking and learning a little bit more. So I actually got a non-renewed teaching contract, which is basically a kick out the door. And I just got my license. We were flipping our second REO, still swinging the hammer myself. First 5 rehabs did. So I have a really good construction background. And it was really tough at first because, as a first time agent, that first year, you're basically doing 1 deal, 2 deals max. Right. So I had a really strong, steep learning curve. And honestly, some of my best deals are where I got stuck with financing. So that leads me to the financing part, where I started as a broker, started doing meetups. So I knew a lot of people that needed capital and had deals. And my mom was in financing, residential, and then pushed to the hard money side. So I started as a broker, and then we actually do table funding now. So if I lend out $100,000 on a flip, I put in the first 10,000, bank comes in with the next 90, it's directly to me. So it's kind of the same as a real estate investment, right? We make the spread off the difference, but I make the spread off the capital. So if I had 100,000, now I can leverage it to $1 million of loans instead of just lending out that 100 and letting it sit. And with that, so those are basically my 2 active incomes, and my wife's a teacher still. So we take those 2 active incomes and we buy our own projects, mostly value add, small balance commercial. Love focusing on being creative, finding the best capital. I love long-term fixed debt, set it, forget it, with good cash flow. So that's kind of it in a nutshell where we are today. We have a lot of equity in most of our single family holds. So I'm trying to look into 1031 into, value add commercial and grow that next step. So.
Wow. Okay. Let's rewind the tape here. Cause again, you're spitting a lot of stuff at us, man. And I love it. There's a lot of pieces to pick apart here. On the brokerage side, is it that you hold your license just for yourself, or do you actually have agents and people that work alongside you now?
Yeah. So it's just myself. I'm actually top 1% in the country for the brokerage. So I'm like low key, don't advertise. I don't, say anything. It's word of mouth, referrals. I love about 50% is residential. The other 50, I would say, is commercial. Love working in the 2 to 4 unit house hacking. Someone who's buying their, third to 10 property with Fannie Freddie debt. That's a nice little niche I like to play in.
Right. No, man, that's brilliant. I love that. And you're keeping it simple on the brokerage side. So you can feed yourself off of that. And then go out and I mean, so you at this point you're not syndicating, you're not borrowing other investors' money. You're doing this all on your own. So it's all your own assets. Is that right? Or am I missing something there?
Yeah. So I still like borrowing debt. We're probably a year or two out from actually syndicating larger deals. I've helped others in that space, more of like a capital sense, but I've always been of the mind that I can't take a dollar if I know for 100% fact that, I'm going to follow through on that. So I can lose 50,000 on a flip and recover. But if, I'm doing a $50 million syndication, my education's there and I know a ton of it.
Right.
I think it's more of the confidence of following through. And then also just being an expert in the market takes years. So, I'm doing things now to hit that in a couple of years.
Right. And I love what you said, and I'm not sure, forgive me, it's still early in the morning, but what you said earlier about, if you build a bridge 99% of the way there and it's not complete, like it's still a worthless bridge. So master what you're working on right now. Talk to us about the transition from still swinging a hammer to then bringing on other crews and people and building a construction company. I mean, that's oftentimes, who was it? Was it, I can't remember who it was, Pauline Stab, but the author said some of the effect of an entrepreneur, having not a technician having an entrepreneurial seizure, right? The guy out there that's working his way, like, oh, I can start my own company because I can swing a hammer. But for you, you've done it. You've transitioned out of that. What was that like? And how did you convince yourself that getting rid of the hammer was a good place to start?
Yeah. So it was so when I was a teacher, there was a really wide awakening moment that leads up to the construction part is I did personal training and, I think I was making maybe $50, $60 an hour. And I also did this REO flip that I rehabbed in about 2 to 3 weeks, mostly light stuff. So swinging the hammer myself, 100% doing it. And just working 15-hour days, and then ended up filling it with tenants and then refinancing and pulling about 26,000 tax-free out just for that 2 to 3 weeks worth of work and having the 25% equity left in the deal. And I started running the numbers on, okay, how many hours would I have to be as a personal trainer? And it was like 10 years to make that same amount. And I'm like, all right, light bulb, I got to start making money while I sleep. So that passive income was a push. So if I'm swinging a hammer, I can't, be stepping out working on the business, and the construction company is more of like a holding. We'll just purchase something and we have subs that kind of handle everything else now. It's still difficult because I enjoy it and I can still swing a hammer. Like we just built our dream home. I did a ton of work, GC the project,
Sure.
finished trim, paint, built the port, like a million things, which was the hardest project of my life, but we're in it now. So it's good. But it was tough, and it's still tough because if you have that skill set, you want to step in and do it.
Yeah. I mean, that's a challenge. That's a challenge for a lot of us. It's you have the skills, you have the knowledge, you have the capacity, but is it the best use of your time?
Exactly.
Yep. And that gets hard. That gets very, very hard to do. Because I mean, even then you might even enjoy it. That's the other thing.
Yeah.
Is that there's part of that. If I'm a hobby woodworker, but I have a background, working in the wood industry, and I'm like, oh man, that's fun.
Nice.
But at the same time, it's like a
Yep.
total waste of my time. Like,
Yep.
what am I doing when I can pay somebody else $20 an hour to come in here and do this? Like, this is dumb. So that's fascinating. The table funding side, that's really, really unique. I mean, coming from a teacher's salary, figuring out how to finance these things. I know you alluded to the fact that your mother perhaps was in financing. How did you work that out? And then when was the light bulb moment when you said, hey, wait, I can make money on the spread and someone else is willing to lend to me that I'm going to lend to somebody else? I mean, that's a little bit creative.
Yeah. And I would say most lenders do it. It's pretty industry wide, but the way we kind of backdoored into it is one, being a broker is great. If you have a nice skill set, you will always have a place. But I always wanted to be the bank. I read a book by George Antone. It was probably one of I read a book a week that year, and that's why I started the podcast interviewing authors. And just I have this weird gift that I can backdoor into the right room at the right person at the right time. And it's the same thing, just connections and just meeting people and going to events. And we got into a small room with relationships where that, you got to be vetted and trusted with that capital, obviously. But it's good because one, now I could be a direct lender. Two, it's more of like a trust, because as a lender, I like relationships. I don't care about the deal. I don't care about the market. I care about the person or the company that's behind it. Because if I trust them, then it's just get them the financing, because I know, you can't be an expert every single market. There's too many. So I like that. Number one, character. Commercial bankers look at the 5 C's. Well, character to me is the number one. And it's also, looking from an investment standpoint, I truly believe that the best investment for everybody is their own buy and hold real estate. And a second is being the bank and syndications, investing in syndications, because you get the benefits of it. But with being the bank, your capital tends to be a little bit more accessible. It's out for 6 to 12 months max. And if you start doing it with an IRA, you can kind of be really creative with it. And you're protected, your first position, your loss pay on insurance. So
you indicated, so let's say, I came to you and said, hey, Scott, I want to borrow $100,000. And you said, all right, cool. You're going to pony up 10 grand to loan me. The bank is going to give you 90 grand. And then you give me the $100,000 minus points or whatever, however that works out. Let's not get too nitty gritty on this. How does the bank collateralize its loan?
First position. Yeah. So it's basically the same thing. It's weird because it's a partnership, but you still go through all the underwriting, processes and guidelines that they have. You just incorporate them. And that 10,000 investment is your skin in the game. So with them trusting you with their capital, they want to see that you're also invested as well. Because if anything had happened, guess who loses their money first? Me. So think about it from a bank standpoint, they're even lower in the loan to value. And now they can, if you have a lot of capital to use, but not the means to lend it, this is a really good arm to, and they charge their base rate, and then you go out and try to earn a little bit extra on top. And then, my portion makes that passive income, where the points in the deal, that's the active, income. So.
Right. So, and I'm sorry to niche down on this, but out of 300,
I love it.
370 or 80 episodes I've recorded at this point, we've not talked about this specifically yet. And so this is intriguing to me. So how did that conversation occur? Like if you asked me, said, hey, Sam, go out and replicate everything Scott just told you today, I wouldn't have any idea where to start. I'd be like, your bank, do you want to lend me? I've got capital, but I want to lend it out to people I know. They'd be like, yeah, go away.
Yeah.
How did that happen?
It basically was, starting with the broker. So there's so many, you can start with the top 10 national, hard money lenders. You'd probably start as a broker that way, and that's, like a loan broker. So someone will come to you with a fix and flip. You say, hey, I've got the right capital for you. Let me connect it to you. Let me put the package together and present it. And then from that, with a track record and relationships, now you start, getting in the right rooms at the right time and say, hey, we also have this, table funding platform. As far as, like a personal lender, let's just say you had a few extra $100,000. Yeah, I would say the same thing. I would say do it with people that you trust, probably in a local market that you can drive to, and just set your principles. Because as well as I, once you start bending on those, even with tenants, bad things happen. So it's hit your loan to value. Say, hey, max I'm going to loan a 75% loan to value. I want skin in the day one. I want you to put 10% down. I'm going to take first position. I'm going to be loss payee on insurance. Place burns down, I get my capital back, and then you get paid. And then even a unique one I like today is pledge of shares. So let's just say a borrower buys a property in an LLC and they default. Well, they pledge their shares of the LLC. So now you don't have to go through foreclosure. And personally, so I wear those 3 hats as an investor. I don't care. I don't care about personal guarantees because I don't take a dollar that I don't pay back. And again, at that higher level, it gets a little bit scarier, but mostly on the 1 to 4s, it's a little bit easier to manage.
Well, sure. I love the pledge of shares idea. That's not one. And I think about back in the days when I was doing a lot of hard money borrowing, that was not anything we ever did. Like everything
Yep.
else you mentioned, personal guarantee, first position lien. I mean, all those things were there, but pledge of shares is a new, unique approach to that kind of circumvents or circumnavigates.
COVID kind of pushed a couple of things, more to the mainstream. And it was interesting to be through that. I learned a bunch. One, have more cash reserves. I mean, I've made more money than I ever have last year alone, just because of what happened with real estate. But, during lending, to see every single capital provider just stop, like
Right.
that was a wide opener, eye opener. So, the local guys were still lending,
Sure.
relationship based, but it's interesting.
Yeah, it absolutely is. Absolutely is. So at some point, you had a conversation with one of these national hard money lenders. You said, "Hey, look, I've been brokering loans for you. I have an opportunity to make some money on the spread. You can lower your risk. Let's work out a program." And so, do they then underwrite the whole deal and say, "Okay, no, Scott, yes, Scott," or do you say, "Hey, look, I'm moving forward with this. Get on board"?
Yeah, so it's basically we put the whole package, and then me as a borrower and working with scope of works and understanding construction, I can pretty much tell with like a 90 something percent odd rate that we're gonna fund it or not. But once that, then you have to go and check off everything through underwriting, right? Okay, what's your deal experience? How many deals have you done in the last 2 to 3 years? Give me your credit score, give me the deal, give me the purchase price, the rehab, and the ARV. And here's our loan limits. Here's your interest rate based off your track record. And then from there, underwriting checks off everything. And it's just, if you have no skeletons in the closet, it's pretty much just a check off. And the appraisal, we lend off the after repair value. So it's an as is after repair value, and it's just backing into it. Insurance, make sure that's good, and then boom, fund it.
Sure. No, that's awesome. And if you don't mind us digging into maybe the profit side of this, like
Yeah.
how does, and again, going back to not swinging the hammer, it sounds like there's enough money in this for you to make it worth your time. So let's take that same $100,000 deal. I know it's just round numbers, but what's a deal like that turn for you on the $10,000 investment? Because you got your time and you got your 10 grand on the deal, right? So
Yeah,
what's that look like?
I think when you leverage it, it's probably like 40+%, but you have to factor in the time that you put in the effort. So, that's like the numbers on it of putting down that $10,000. But I'm always a fan of creating more passive income. And I know you still, Jay Scott's a phenomenal like advisor, that you still kind of have to have an active income to push into, passive assets, or you take the time to create it. Basically, I charge between, let's say, 2 to 3 points. The more the deal is, like if it's a first time borrower or second time, I have to put more effort and time. And if they have a scope of work that's 5 to 10 draws, that takes an additional time again. So the points are based off that, how much effort I have to put in the deal. If you're easy to work with, it's just turn and burn.
Sure.
As far as the percentage, so let's just say, a lender says, "Hey, I need at least 8% return." And then you can go ahead and charge 10, and try to make that spread off of your capital. So you can create a nice little passive income stream of, a couple $100 per loan per month that's out there. And once you get to a certain level, you can actually, lenders like to sell those loans up and package them, and Wall Street's buying a ton of it, but it's way above my level. I'm like, so brand new beginner lender. I'm like step 2 or 3. So I still don't know what I don't know. It's way above me, but I know enough to invest in real estate, try to be the bank, and be creative.
Yeah, no, I love that. I think that's brilliant. And I love the idea because you can cycle that money. And I think that's one of the things for the hard money lender side. You can cycle that money so many times a year. If you've got an efficient rehabber, I mean, I'm going back to my hard money days. We had a 120-day loan. So every 4 months that money had to get, or 3 months. Yeah, 4 months. Basic math. Again, it's early. We had to recycle that money it was getting recycled every 4 months, like the loan renewed. And so we were very efficient about getting in, getting out. I mean, rehabs were quick. We were to the point because we knew that 4-month window came up and there's another 2 points due. Like, oh my gosh, time to work.
Yeah.
So, I mean, and that's the beauty of being on the lending side, is that 10 grand, if you have 100 grand, you can do 10 loans. I mean, that's pretty spectacular. And if you said like your lender's loaning at 8 and you are charging 10, you're getting a 25% bump, right out of the gate for money that wasn't even yours. So
Exactly. Yeah.
that's,
Yeah. And you can, even if you lend that $1 million a year and you're making, 2 to 3 points, well, there's 20, 30,000. So, and you could, and that's only $1 million. So if it's kind of like real estate. Well, if you're actually producing and selling 5 to 10 million, you could do the math where you're making a nice little income. But I've always liked to take a step back and make sure that I'm not heading down a bridge that I don't want to be on, right? Like I have to focus and make sure, okay, buy real estate. Like, so it's a nice little pause. What I would recommend is don't get into the space unless you want to be a lender, right, and build that bridge. If you want to do 2 to 3 to 5 loans a year with your, self-directed IRA or, some other LLC, I'd say go to town. It'd probably be the easiest money you ever made with people you trust.
right. Yeah. That makes a lot more sense. Cause when you're 100% the bank, when all you're doing is lending your own capital, that makes it a much more streamlined process. You're not dealing with a third party. You're lending your money. You're getting a full return, and it's wash, rinse, repeat again, but just a little more streamlined. And you're not becoming a lender, going through those hoops. Yep,
exactly. And once you do your own capital, it's a lot less labor intensive in the sense that you have to bring the whole package through underwriting, which is fine because it's an asset-based program. So it's not like a Fannie Freddie underwriter where you just want to hit your head against the wall. But what I also, keep in the back of my mind is diversification, right? You can, syndications, own your own real estate and be the bank. So that's a really nice, even though it's 100% real estate, but I get real estate. I understand it. I love it. So, with lending, the downside is you lose some of the tax benefits of holding real estate. So the depreciation. So it's really good to understand which one you want to go to. And, at the end of your career, you don't really want to do much and you just want to have your capital work for you.
Right.
Phenomenal place.
Man, I love it. Hey, before we run out of time here, let's fast forward maybe into what it is that you guys are looking to grow into. I know you said right now you're trying to, get out of the single family space, go into more commercial assets. What's that look like for you? And just walk us through that.
I like to focus on creative. I'm trying to think a little bit smarter in the sense that I want to be very specific in like the rightful approach to my investment strategy. So all my earlier single families with the market, there's a ton of equity. So instead of just 1031 into an asset that's already stabilized, I'm like, okay, maybe I could 1031 into something that I can add, a second story apartment to that's Main Street. I love Main Streets. I think they're going to see a resurgence, especially around here. So I focus on something that needs work that I can stabilize. And again, limiting my risk, working with like a local bank that does a construction to perm mortgage with no balloon. I'll take an ARM, but balloons they stress me out. So that's what I'm doing. And then hopefully if it's stabilized and it's really, and the rehab came on point, which rarely does, maybe then I can do a cash out refinance. And if I do that, let's say 5 times and then pull that original investment out and keep growing it that way. And then I think with that, I start working in that $1 to $2 million space. Well, then with those same funds, I get that next level. Well, now I can look at syndicating and start to bring on people that I know and trust and say, hey, here's one of the best investments because you can be part of the deal and get appreciation. And I think that's kind of the growth path I'm looking to move on. And as far as the agent side, what I've kind of niched into is working with all my contractors and other people that are in the real estate business buy buildings. With the SBA 504 loan, phenomenal loan product. We got one last year on our business. I bought 2 commercial buildings and a residential duplex on one lot, 10% down, added the $55,000 rehab, and I did a cost segregation study and wiped out all my agent taxes. So my net in the building was $15,000 for 3 buildings. So I love that. So I love being creative.
Man, that's awesome. I look forward to tracking your progress here in the future and just seeing what's in store for you, Scott. This has been a blast. Few questions for you. If you could help our listeners avoid just one mistake in real estate, what would it be and how would you avoid it?
Focus. Build that bridge. Unless they're a little bit interconnected, then play a little bit, but have your main bridge and build the other bridges while that one's growing.
Right. I love that. That's I think the challenge for us all, the whole inch wide and a mile deep idea. That's fantastic. Next question for you. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
We have a couple of great charities in Connecticut that I'm a huge fan of. So Paul Newman's Hole in the Wall Gang Camp is in Ashford, Connecticut, where I used to be a teacher. And then we have a couple other really good local ones. And love Habitat for Humanity. Built a couple houses for them. So it's awesome.
That's fantastic. Scott, if our listeners want to get in touch with you, what's the best way to do that?
LinkedIn, Facebook, Instagram.
Fantastic.
So,
and if you're trying to find the right Scott Hollister on LinkedIn, Facebook, or Instagram, look for the guy with the killer beard. That's his trademark look. So I love it, man. Scott, thanks so much for the time today. I do appreciate it.
Thanks, Sam. Appreciate it.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.